Thank you all for joining us for this webinar. We at MoneyShow want to say that we appreciate all of you for tuning in once again. Today, our speaker is Ken Calhoun, president of TradeMastery.com. Ken, the floor is yours.
Hi, it's Ken Calhoun. Hey, Dylan, thanks. And thanks, everybody, for being here. I wanted to welcome you to today's session. We're going to look at live real money trades coming up here. And if you have any questions, do feel free to ask me throughout this morning's presentation. I'm going to hit OCG, and I'm just going to do little baby trades. We're going to look at breakout patterns. One of my favorites is this one, where you got a small gap that continues up. I'm going to hit the 85. Hey, look, a real trader in his native habitat. I'm going to hit the 85 with a hard stop right under where it's currently at say 65. It's a little wider of a stop than I'd want, but I'm going to go ahead and preview and place that order. So you will see the real money trade confirmation light up from Fidelity down here in the bottom. If this breaks 1585, we'll see if I get a fill. Anyways, welcome aboard, and we're going to take a look at some of the best patterns. I only have 30 minutes. Feel free to ask your toughest questions, right? My favorite way to day trade is to put in a sequence of 3 or 4 orders spaced 20 to 30 cents apart with 10 or at most 20 cent trailing stops. And that's how I put in a sequence of orders for things like this chart. The first pattern that I taught you, just to clarify, is a small gap that continues up. The number one rule as a day trader is to do not trade low float under $10 stocks. Those are for morons. What you want are stocks like this that actually have volume and volatility. You only trade above the previous day's high. If I teach you nothing else in this life, that's what you call out versus in charts. Trading inside the previous day's range is dumb. It's smart to trade above the previous day's high because that's where institutional high frequency trading algo volume comes in and lifts this punk up. So we're going to see if it breaks 85. Here's one that we caught today for our members in the live room. Marathon, a Bitcoin play. My favorite Bitcoin instrument is MARA. And again, you can see it gapped up to the previous day's high. My long call on this was somewhere up in there. Anyway, it ran all the way up, and this one looks good over 61. Anyway, so that's a 2-day high gap continuation, small gaps that continue up. Now, if you do play pivots, one of the other favorite patterns is what I call a bear cup reversal. And again, this is above the previous day's high. The previous day didn't do anything. It was at 980 a share. It ran all the way from 10 to 16, back down to just over 11, and it bounced off the whole number. So a pivot off the whole number here is indicated. And that's one of the patterns I like to look for, is a bounce. I want to trade this thing, SBEA. Excuse me while I trade. Hey, Mr. Dillon, any questions from the house so far?
Nothing quite yet. I'll let you know as you come in.
Okay, thanks. I'm going to hit 12.10 with a hard stop at 11. I have time to get this order in. 11.9. Real money trades, real money all the time. Watch a real trader work. In little itty bitty trades, just doing 100 share trades, so I'm not worried about it because I'm trying to present here. But anyway, I'm going to buy over the 12.10. Looks like I bought some OCG in, so I got filled on the OC. One of the other key things, in addition to playing above the previous day's high, is look for either pivots of large range instruments like this. It runs up, comes back down, and bounces. Now, sometimes it's a dead cat bounce. Wow, bad kitty. Whoosh. You don't want that. What you want is strong bounces above whole numbers. So I'm using 11 to 12 as the consolidation range above the support. I'm going to hit it right over the 12 if it goes up here with an exit target up near 13. So that is SBEA. Marathon is a nice gap continuation, kind of an ascending triangle pattern. The single most important thing I will teach you about trading is use really teeny tiny stops, okay? But the other really important thing is chart patterns are not nearly as important as you might think. You know, professional traders, and I was asking Tom Sosnoff, who is brilliant. He says trade small, trade often. He's absolutely right. He was speaking at one of my events a couple of weeks back, and like I had asked him about the thing about charts, and the point is charts are not nearly as important as you might think. It's all more about the risk management and position sizing and scaling, throwing out your order flow, scaling into, I may be in as many as 1,000, 1,400 shares, but 200 shares or 100 shares at a time to scale into the position with tight trailing or hard stops. Now I've got a quick question for all of you. Do you guys use mostly hard stops or trailing stops? Or do you use both? If you would, type in the word, either type in, let's keep it short, type in letter H or T for hard or trailing, or B for both. So all you have to do is type in one letter, H or T or B. Do you use hard stops, trailing stops, or both? And I'd be interested, Dylan, if they do post, it'd be interesting to hear what they say. And if there's any questions, let me know.
We actually got a question about your frequency chart, actually. Are you using 1 minute, 2 minutes, 5 minutes, and why?
Okay, smart question. I use the 2-day 1 minute chart. Hey, my OCGN's in the money. It's working out. Getting paid. Bum, 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 bum. We're at 1597. I got a hard stop at 65. Let's tighten that trail stop into 95 because I want to get paid during this webinar. So, I make that 90, make that 80. It's like Wall Street heard me, and it's like, let's see if we can take his money back. I don't think so. I've been doing this 20 years there, son. So I canceled the initial trail stop and put a hard stop at the 85. I use a 2-day 1 minute candlestick chart. The reason is I want to see what the heck's going on. Now, I like using a close-up chart that goes a little something like this. And what I do, I use these signal charts, and I use Fidelity and Interactive Brokers as my brokers because they kick ass. They're really good. And I'm just got paid. Anyway, I'm putting a hard stop at 1585. I had an earlier order, and I canceled that and replaced it with a tighter order. Now, this is how I make money as a day trader. I like to tighten up the trailing stop. The further it runs up in my favor. And I always like to sell or squeeze the trailing stop up near a whole number, right? So I'm going to sell it at 85. So if it drops, and here's what's called time and sales of the tape. Now, how many of you have lost money trading? We've all lost money trading. How many of you worry about how many percentage of trades you get right? It's irrelevant. All that matters is how much money you make. My biggest winning days and my biggest winning years, I may well be wrong 67, 70% of the time in terms of the number of successful trades. The win rate is irrelevant. What matters is the money, right? Show me the money. So the point is, I just put on a winning trade in front of you. How many other presenters actually do live real trading in front of you successfully like that? Who? Nobody. Because I know what I'm doing. I'm the real deal. Anyway, I'm in some SBEA. I got filled on that. Now that one might F me, right? We'll see where it goes. I got stopped out trying to play it the first bounce. Let's see, SBEA. We're at 38. Oh, wow, we're up at 30 on the inside. Okay. I'm going to tighten up the trailing stop on this punk to 12.2. Preview. Oh, fudge it up. I can't do that because it dropped. Okay, would you believe 12.1? We're at 27 on the inside, 27 by 9. I'm going to trail a stop at 12.10.
Hey, Ken, I've got a question for you.
Yeah, sure thing.
All right, so...
Ask away. I'm the real deal. Give me your toughest questions. I've been doing this 21 years. I've traded millions of dollars worth of stocks and ETFs. I know this. I got this. I got you guys covered. So what's the question? I'm sorry.
The question's relating to stops, actually. Are stops supposed to be below a pivot whole number?
That's a good place. Also, what I'm demonstrating for you here, though, is once a trade starts to work out in your favor, I like to manually tighten in the trailing stop. It's a pain in the butt, and it's a lot of work, but I like money. You know, the way that I keep my money is when it starts to run up and starts to roll over like this, I tighten the trailing stop to a dime or so within the inside market. So I got my hard stop on OCGN at 1585. Oh, now we're 16. Yay. Happy days are here again. Calhoun's getting paid during his webinar. I love this shit. I mean, sorry. I love this stuff. Let me illustrate for you. Let me tighten in the trailing stop. Now, where would you guys tighten in the trailing stop? I'll tell you where a pro does it. 16 and a nickel, right? We're at 14 on the inside. I'm going to replace order at 1605, and boom. Only learn how to trade from people who actually really trade, not people with PowerPoint charts. PowerPoint's for sissies. Real money trades is for bosses, baby. Anyway, so I'm trailing a stop at 1605 where it's 15 on the inside. That's a dime down from the inside. So I'm going to sell it right here. In the money, live real money trade. I can open up my Fidelity account and you could see. I'm only doing 100 share trades because I want to focus on teaching and not. Now, isn't it amazing? I picked 2 and only 2 charts. I'm 100% winning in this presentation. Who else in the world can do that? Can't touch this. Anyway, SBA, baby, it's a 1240 out of 1210 trail stop. Let's tighten that up too. We're at 41 on the inside. I'm going to trail it at 34 if I can get that off. 34 at 43. Replace order. And you trail it right there. Because I'm going to play a little horn now. If you don't know how to trade, you get the blues. And if you get the blues, oh, you may sound a little something like this. Anyway, back to our regularly scheduled program, gang. Oh, I love me some tenor sax. For more, go to tradingjazz.com. Anyway, and it looks like I'm back out. Okay. I'm still in OCGN. Let's see. And there, I'm out, okay? So I just got paid in OCGN, selling near the exact freaking top. I sold up here. Now, do you see why I put my trailing stop at where did I sell it at? 1605. So I sold near the exact top of this by trailing a stop before the thing rolled over. That's how you trade like a champ, right? You tighten up your trailing stops as it runs, and then you get out at the first sign of trouble. Now, see, it's going down without me because I made my money. I got paid before the dumb money came in. Oh, it's going down. What do I do? So you don't want to have the blues unless you're a badass jazz player, but you don't want to have the blues as a trader, right? You want to make money. You want to get paid. The way to get paid as a trader is really, really tight-ass stops. Throw a lot of darts, right? Like Sosnoff says, trade small, trade often, 100% right. I used to say something similarly. He says it better. I say trade wide, not deep. And that's also correct. You diversify, trade a handful of different instruments, and tighten up trailing stops. Trade. I use like a Pac-Man approach. I do these little 100, 200, 300, 400 shares trades at a time with 10 or 20 cent stops. So the cost of me being wrong and my stop losses is almost always under 30 bucks. And I may do as many as 105 trades a day, so I'm a maniac, but sometimes I get death with 1,000 cuts. But the main thing is the cost of being wrong on any one trade needs to be as small as possible without getting shaken out all the time. So the way to do that is, on average, I like doing 200 shares at a time with 10 or 12 cent trailing stops or hard stops, and that way I can get in on the breakout and get out at the first sign of trouble. Let's see, Mr. Dillon, any other questions for me?
We actually do have 2 questions.
Well, that many, okay. I used to get all dozens of questions, but that's okay. Yeah,
Actually,
you ask
we
away,
just had a
folks.
third. All right. So the first one is, how do you select the stocks that you're currently looking at?
That's a great question. If I could find it up in here somewhere. There's the Fidelity percent gain list and all that. Let's see, where is that? Quotes and watch list. Anyway, I look at CNBC in the morning. I live on CNBC on my cell phone, right? So I look at some of the percent gainers and all that. The main thing that I look at, though, is on Fidelity. They've got, I use Active Trader Pro, and they've got this really cool little, I wish I could find it. I made it float, and now I don't know where it's at. Where'd you go? Filters, maybe that's it. Yeah, there we go. Okay, cool. Behold the power of Fidelity. I like using the most actives and the percent gainers, and what I will do is I sort by volume on that. A pre-market, and that's where I get a pre-market watch list. Another place I look at in Fidelity is the percent gain list. And the way that I filter that is I sort by volume. Actually, I sort on this one, I sort by percent change, and then only pay attention to ones with high volume, at least a couple million shares this late in the day. So now it looks like Avis up. CAR, OLB, XELB, TPOR. That's how I locate instruments that are worth trading. You do not need any fancy third-party scanners. You definitely don't need squiggly lines on a chart to day trade. I just did 2 profitable trades for you live in front of you without any squiggly lines on charts. That's dumb. All you need is price action. Like bright shiny object. Mara's taking on new eyes. I want to hit 61. I'm a trader. Next question.
All right, next question is, what are your thoughts on options, and are there trailing stops for options?
I'm not an options trader, sorry. I trade the underlying. I'm a stock trader, is what I do. I'm not an options trader. Options traders, you want to talk to Larry McMillan and Tom Sosnoff. They're the 2 sharpest guys I know for options, but I'm not an options guy, so sorry. Next.
All right. Next question is, do you use SMA?
Nope. Well, I do on swing trading charts. You know, for example, I'm trading Ford, and I use the 50, the 100, and then 200 SMA for swing trading charts, usually on a 3-month chart. And your SMAs are helpful, but not for day trading. But for swing trading, they're also not really helpful. The main thing is price action and range. What you want to look for as a trader is expanding ranges. Now you can use an ATR indicator if you really need it. But main thing you want to look for is large green candles on the daily candlestick chart in an uptrend. And risk management, if you see a shooting star like this, you trail a stop right under support, right? That never would have hit, so it kept running. So anyway, learn candles from Steve Nissen. But next question.
That's it so far.
That's it so far.
Actually,
okay.
we just got one in this minute,
Okay.
actually. What is your criteria for possible trades?
I like 2-day high gap continuation plays, like Marathon, boom, like this. So the main criteria is I want volume of at least 1 million shares a day, or for day trades, at least 15,000 shares per minute is absolutely, positively critical. Never, ever day trade anything less than 15,000 shares a minute, because otherwise those are subject to front running by morons and dishonest people running low float under $10 chat rooms where they buy thousands of shares and say, I'm in this. And then their victims come in and buy it, and then they pump it and they dump it and they sell it. So don't never day trade low float stocks under $10. Those are for morons, and the people that do that kind of front running are about to get knocked on the door by the FTC and the AG's office. So high volume is important. 15,000 shares minimum per minute. I like charts with a minimum 1 point range, and I like charts usually between, my bailiwick is not, this is kind of expensive for me. I like $15, $20, maybe $30 a share. So $15 to $30 a share charts with good volume and good directional volatility are the kind of criteria I look at for my trades.
That's it so far with questions. So if you want to keep on a roll, go for it.
Sure thing. Yeah, we got just around 10 minutes left. This guy's going to bounce soon. UVXY. I got like 6 orders in for this at 1605, 1578, 84. I've got orders to buy 75, 74, 5, 7, and 8. So I'm really keen to buy this guy on a bounce, and you'll see orders get filled 200 shares at a time if this guy bounces during our presentation in the 10 minutes we've got remaining. But anyway, biggest lessons learned. I had to get signs made up because I'm notoriously in love with trading, but like my cool virtual background here. One sign says, no trades after 10:30. So try not to trade after 10:30. Another sign that I had made up, that I still to this day, 20 odd years later, stop over trading. So, because again, I do as many as 105 trades a day, and I almost always get stopped out when I trade after 10:30, 11, but yet I still persist. So one thing that I do is I trade lighter share size if I do trade later in the day. So the main thing is only focus on, or primarily focus on, wide range charts or high volatility charts like this guy, the VIX ETN, or charts that have good directional breakouts to the upside, like NEO. Here's a good example. Another quick tip is focus on what I call clean charts as opposed to dirty charts. Clean as opposed to fuzzy, choppy charts. Clean, nice, tight, like this, where you could have traded it easily without getting stopped out for the most part. You want to avoid choppy charts. And that's difficult to teach people because people seem to still ask me about charts that you have no business trading. But the cleaner and the wider range the chart is, that's the big benefit of charts, is range, number one, and trend, directional volatility and range. Those are the two most important things you want to get at in charts. You don't use squiggly line indicators. Hey, what's the VWAP say? No, Sparky. It's all about trade management, throwing a lot of darts, trailing your stops tight, and scaling in repetitively. Again, my biggest winning days on things that I trade, I may do anywhere up to 5 to 15 or 18 trades in that single instrument, small 100, 200, 300, 400 share trades in what I call a ladder, a rack of entries spaced out every 20 or 30 cents. So that way, even if I get shaken out on the first one, maybe I make it back on the second one. Maybe I get stopped out on the first and the second one, and I get a break even on the third, and the fourth one pays off. Or maybe they all stop out and I have a frustrating time with that chart. But for the most part, you want to have an intelligent, rules-based strategy with very tight risk. Again, my average risk, my average stop loss size is well under $50. It's more like $18 or something. So I have really tight stops, but I trade very frequently. And that's the right way to trade the markets. You have my word on it. I've been doing this since the late 90s, so a lot of copycat competitors that copy my university theme and all that, but I'm old school and here. Okay, look at the tape. I got 7 minutes left, so any questions, hit me with your best shot. I've got to get back to my room at 11:30, so I've got till 11:20 here. If there's any other questions, let me know. But clean charts, 2-day high breakouts, right above whole numbers is almost always a good place. To avoid false breakouts, how many of you have ever had this happen? You get in on a chart that looks like it's going to go up, and you buy the first sign of a breakout above horizontal resistance, and you get a false breakout, you get stopped out. And then it runs up without you, and you go, dope! And you don't tell your wife about how much money you lost. If you're concealing your trading losses from your family, you've got a problem. If you trade more often and lose more money than you make, something's got to improve, right? Anyway, the point is, to avoid false breakouts, the best strategy is to get in a minimum of 20 to 30 cents above the previous day's high. See, and this one would have worked out fine without so much of it just went straight up. But usually things will bump up against the previous day's high, go up a little bit further just to get in the newbies, the public money that doesn't know how to trade, and then it crashes back down. So to minimize that occurrence, and test this out for yourself, you'll see how well it works. I've trained tens of thousands of traders, including a lot of Wall Street guys that used to come to my Vegas seminars. You want to do a minimum of 20 cents or so above a whole number is a good entry strategy. So 41.20 would have been the trigger there. And then you trail a 20, 30, 40 cent stop, and you sell into the nearest whole number. So you may have seen my articles, award-winning articles in Stocks and Commodities magazine. You go along 20 cents or so above a whole number and then sell the 90 cent window nearest, right under the nearest whole number. So in at the 20, out at the 90 kind of thing. And then you can re-enter over the nearest whole number as well. And with 5 minutes left, I'm breathless with anticipation for your questions. So do feel free to ask. I haven't gotten filled on anything yet. I'm still waiting. Still patiently waiting.
I do have some questions for you whenever
Yeah,
you're
sure
ready.
thing, man.
All right. First one is, do you sell short?
No, I just go directionally long. I don't like shorting. I will start shorting if the market goes down, but see, the stock market's going up. So I generally like to go long in a long market, except for the inverses. I do play inverses on dips. So the closest I get to shorting is I like to play UVXY daily on any bounces that it might have. I nailed it yesterday. I went boom. But I got stopped out trying to bounce here. But I made money on the way up here, and I want to make, it's at a 52-week low, which is almost always hint a good place to buy this thing. So I've got a whole rack of over 1,000 shares ordered to buy. Not a trade recommendation, but I'm going to start buying it over 1580, 1582. All right, next question.
Next is almost a two-part question about your stops. One is, what price percentage for tight stops? And the next one is, what is your stop limit like? 10% or 20?
I would never use in a million years stops that big. Because, see, I'm in it to not give money to Wall Street. So I use 10-cent stops on 200 share trades. So that's a $20 stop loss cost. That's my average. I don't use percentages. Percentages are irrelevant. I use the dollar figure. So, I mean, you could calculate percentages. I used to be a statistician for Ford Motor Company. I'm a hardcore numbers guy. I'm a total quant. Percentages are relevant. What matters is price ledges and price action and the tape. So for a day trader, I'm using 10, maybe 12 cents, at the most 20 cents if I'm trading like a $60 instrument. But for these guys, I use a dime, 8 cents, right under where I got in. So for example, this is 1570. If I buy 1578, I'll put a hard stop at 1568, just a dime under on a couple 300 shares. So that's very tight risk is the hallmark of a great trader. Ask anyone who's good at trading, how tight are your stops? And you'll hear really, really tight. Ask anyone who totally sucks as a trader, oh, really big percentage stops because you got to give it a lot of room to wiggle. No, it's all about the numbers. All right, next question.
Next question is, how do you screen for stocks pre-market or day before?
I use that Fidelity filters. I look at the high volume, most actives in the pre-market, and then I'll pull up the chart and see which ones have the best looking chart pattern. So I will do that. And also I look at previous day's gainers. You know, for example, what was it? LCID? What was it? LCID, I think it was. Somewhere in there. Anyway, things that ran up a lot of points in the previous day often make for good plays, up to around 50% though of the range. It's not going to do the repeat, but previous day's gainers that had a 45-degree angle breakout that you then buy above the high of that on the subsequent day usually make for good charts. And for more, be sure to see my colleague Harry Boxer's great book called Profitable Day in Swing Trading. If you can find it, I think it's hard to find. It's a great book. But Harry Boxer's another brilliant guy who knows his breakouts great. So at thetechtrader.com, Harry Boxer, I'm a huge fan of Harry's. He's a good guy. And his book has a lot of great rockstar patterns to look for as well. So next
question are,
only got 2 minutes left, folks. So hit me with your best shot.
what are your thoughts on trading pre-market?
Yeah, on rare occasion, I'll trade pre-market. Unfortunately, with Fidelity, you can't trail a stop pre-market, so I don't trade much pre-market. I do a lot of scanning as early as 4 in the morning, my time, 6 in the morning, East Coast time. So I'm following the market and the percent gain and the pre-market gappers, but I don't do a lot of trading in the pre-market. Unless it's to sell a gap up on a swing trade that's starting to fade back, then I'll go ahead and sell it and take a profit. So, next question. Is there any other questions?
Yep. Next question is, do you use Thinkorswim or Tastytrade?
No, I use Fidelity right now, and I used to use Interactive Brokers. So, yeah. Next.
It seems like a couple of other people are keen on you using Fidelity. What are your thoughts on scaling out?
I usually sell all at the first sign of trouble. I scale out on swing trades. Usually half at a 2-day low if it screws up and goes against me, and then the other half on the day after on a 2-day low. But for day trades, I'm all in and out on a multiple of on a variety of positions. So I scale in, but then I'm all out at the first sign of trouble. And especially if it's near previous resistance or a whole number. So if I buy, say, 1580, 1590, 1605, 1620, and then it starts to roll over because it's at the previous day's low, then I will tighten up the trailing stops to nickel or dime under the inside market and go to cash and all those, bank the profit, and be done. All right, we're about out of time. Any other last questions?
Yep. Last question is, any advice for small accounts under 25K that can't day trade in the style?
Sure. You can trade cash as much as you want. So don't have a margin enabled account. Make it a cash account. Again, this is not a trading recommendation because I'm not a registered investment advisor. But what I would do personally is still trade. You can trade in and out of cash. Small size cash trading is the right way. And you got to wait for the cash to settle. So you got to trade like roughly every other day. You can still do like 20, 30, 40, 50 share trades unlimited as long as you have settled cash to work with. So itty bitty, itsy bitsy trades, 10, 20, 30, 40, 50 shares at a time on relatively inexpensive instruments but not under $10. I like 15, like this guy, $15, $20. You can trade unlimited as long as you have settled cash to work with. A lot of people don't know that. The pattern day trading rule is only applicable to margin accounts. So trade cash small, and you can do 15 trades a day, every single day. That's the right way. Maybe single shares or 5 shares to learn. Once you start to get good and start to build your account up, then hopefully you get over the 25 and then you can go to margin account. But cash account, small size, you can trade as much as you want. Ask any broker. All right, is that going to wrap us for questions?
All right. Yeah, that does conclude the session.
Okay, let me just give a quick 10-second elevator pitch here. I've got my fancy new well-designed trade mastery site. You guys are welcome to join my what I call an action club for a free day trading course. The main thing you want to get at, though, is my Zoom webinars that are the Saturday trading week ahead. I've been doing them for over 12 years, and over 6,500 people have registered for these. So they're really popular, and we go over Q&A. No big sales pitch. It's just 30 minutes every Saturday, completely free. It's the best way to get to know me and see if I'm a good fit for you. So try it out for free and see how much money you could potentially make before doing anything for pay. So thanks, Dylan. Thanks, MoneyShow. It's been great. And I hope the horn playing was kind of fun, as well as the tips on active day trading. And thanks for being here. I appreciate it.